Hello everyone and welcome to this last economic impact video for 2022. My name is Martin Gagnon and as usual, I am with our chief economist, Stéfane Marion. Hello Stéfane.
Hello Martin.
So Stéfane, we will do a bit of a review of what happened in 2022 and we can say it was not a great vintage.
No, not a good one, Martin, even though the quarter's ending on a positive note. If you can see the blue bars on this chart, pretty good return so far in the fourth quarter, but not enough to salvage the 2022 year, which is still quite negative across all asset classes, except if you were in cash. So a tough year, Martin. You rarely see both equities and the bond market declining the way they did in 2022. So a frustrating year for investors.
So typically, Stéfane, we have some alternative assets that will be a bit of a safe haven, and they were not.
Yeah, in a context where inflation's a bit on the high side, you would have thought that the housing market, which did well for part of the year, Martin, but in recent months, homeowners are seeing an outright decline in home prices, and something we haven't seen in quite some time. You have to go back to the last tightening cycle back in 2008 to 2009 to see home prices also declining.
And the new diversifiers, digital assets, didn't do it either.
Well, digital assets, some people call them digital tulips, Martin, so it depends the way you look at it, but clearly not a good year for alternative investments. Bitcoins is down to 63%. The main concern there, Martin, is we're finding out that governance was not necessarily a priority for this asset classes, and under these conditions, investors are getting more nervous about alternative diversification. When you don't have good governance, it's hard to invest.
Now, let's talk about interest rates because for sure the big topic we will remember about 2022 is this unprecedented interest rate increases that we witnessed.
Yeah, Martin, because people will say, well, it's the highest interest rate. Take the Bank of Canada, for example, 4.25% on the overnight rate. And you can say, well, we've seen it before in 2008. But Martin, you're absolutely right. We've done 400 basis points in only 1 year. And this has never happened before. So this is why financial markets are unnerved. The pace at which central banks have tightened is unprecedented. And Bank of Canada is not alone. Everyone has done it. So therefore, it sets the stage for some economic uncertainty in the months ahead.
And we did all of this because we needed to fight inflation.
Yeah, well, that's something we haven't seen in a generation, and you're right to point this out, Martin. So inflation on a year-over-year basis is around 7% right now in Canada, but in recent months it has slowed to 3.5% annualized. So think about it, Martin, the overnight rate's at 4.25%. Inflation in the past 3 months is running at a 3.5% annualized rate. So that means that monetary policy is clearly restrictive at this point in time. So the good news, Martin, is it seems to be decelerating, enabling the banks, the central banks, to take a pause and assess the impact of prior rate hikes.
And in terms of assessment, they do have to look out east and see what's happening in China.
You're right. And one thing the central banks are saying that we don't fully understand the inflation dynamics in 2022, where Martin, China still had a zero COVID policy, so the global supply chain is not fully normalized. The good news now is that, we've been talking about that for quite some time, but now they're starting to reopen the economy. There will be collateral damage on their healthcare system. However, for the manufacturing, global manufacturing, things will start normalizing. So part of that, as China reopens, because now they're closed, as they reopen, I'm hopeful that we'll see better pricing for manufactured goods in the months ahead.
Looking at the months ahead, Stéfane, one sign that is a bit troubling for 2023 is the big yield curve inversion that we're seeing.
Yeah, a number of economic indicators, leading economic indicators, Martin, are pointing towards a slowdown. So the economy is still strong now, but pointing to a slowdown. And you're right to say that one of those leading indicators tends to be the yield curve. The yield curve now is the most inverted that we've seen in more than 20 years. Historically, Martin, there's only one precedent where you have a yield curve inversion without leading it to a recession and significant job losses. So again, close call for 2023. Clearly, there's an economic slowdown. The magnitude remains to be confirmed, but slowdown is coming in 2023, that's for sure.
Talking about a slowdown, the real definition of a recession, Stéfane, is what happens in the labor market. Are people losing their job? And we're seeing still a very strong labor market, which is a bit puzzling. And maybe you will be shedding some new lights on this.
It is puzzling, and that's the definition whether you get massive deleveraging for an economy and significant layoffs. The difference this time around, so we know the slowdown is coming, Martin, but one of the options that employers have is to reduce their headcounts via attrition as opposed to outright layoffs, which depresses disposable income by significantly more than retirements. So what you can see on this slide from a Canadian perspective, and that's true for many OECD economies, Martin, is that right now, currently in Canada, 280,000 people are leaving the labor force every year for retirement. That exceeds the growth in the working age population. So you see, we've never seen demographics like this before, which means that you could have a significant economic slowdown without necessarily massive layoffs. Of course, depending if the central banks soon take a pause on their interest rate increases, but if inflation decelerates, you could have economic deceleration, a significant slowdown, but not necessarily the massive layoffs because of these unprecedented demographics that we're coping with.
So we may be arguing as to what is the real definition of a recession in 2023.
Absolutely.
Now, in terms of conclusion, Stéfane, 3 quick questions. So, are we in a recession?
Not yet.
Not yet. Your outlook for 2023, 50-50?
I think so. The labor markets are still quite strong, and I've just spoke to the demographics, which is unprecedented. I think much of it will depend on the path of inflation, Martin, whether these central banks are now able to take a pause. So hopefully the Bank Canada is done right now with interest rate increases, and let's see what happens elsewhere in the world.
So you just answered my second question. The third one is what should we do in terms of asset allocation?
Well, let's play defense, Martin. The reality is we have to confirm that the Federal Reserve, or I say other central banks beyond the Bank of Canada, are willing to take a pause. We need inflation to decelerate until we confirm that the central banks are willing to do a pivot. I think let's play defense because we know the slowdown is coming. Now, I need the central banks not to exacerbate the slowdown in the coming weeks.
Excellent. Thank you very much, Stéfane. Thank you for listening to us. I hope you enjoyed all of those videos in 2022. Thank you for listening. Happy holidays. We'll see you next year.